I could have an ounce of gold for $42.22 on an infinite time horizon at the end of time, or I can have it right now for $3,000. So if I bring that to the present day, now I can say, well, I can have at the end of time itself, I can have $3,000. I can have gold for $3,000 an ounce, or I can have gold for $3,000 an ounce right now. So what are you going to do? People say, well, I'm not going to live till the end of time, so I'm going to take $3,000 right now. So everyone rushes out to buy gold, and that skyrockets the spot price of gold. So once again, back to the rubber band, it just shifts over. And so now the statutory price is $3,000, and the market price is $15,000, $20,000, $30,000 an ounce. And this will happen, within a couple of days as well.
History often whispers its warnings before it shouts collapse. The rise and fall of global monetary systems serve as a cautionary tale, with the decline of the British Empire and the shifting dominance of the US dollar offering key lessons. Monetary regimes have always been deeply tied to power, debt, and gold, now increasingly Bitcoin. In 1971, the inevitable happened when President Richard Nixon closed the gold window, ending the dollar's convertibility into gold. This move mirrored Britain's exit from the gold standard in 1931. However, unlike Britain, the US maintained its global dominance through its military-industrial complex, petrodollar arrangements, and financial hegemony. The gold window never reopened despite Nixon's assurance that it was temporary. The statutory price of gold remains at $42.22 per ounce on the Federal Reserve's balance sheet, a valuation disconnected from reality as gold now trades at around $3,000 per ounce. Market analyst PhilLow describes this disparity as a stretched rubber band. Eventually, the tension will snap. In 1971, it took $35 to buy an ounce of gold. Today, it takes $3,000. The gold itself has not changed. The dollar has lost its value. This persistent devaluation raises questions about whether the U.S. government will soon move to officially revalue its gold reserves, a topic that gained traction in 2025. Revaluing gold to $3,000 per ounce might seem like a solution, but it would only shift the imbalance. Low points out that such a move would trigger a rush to acquire gold, driving prices up to $15,000, $20,000, or even $30,000 an ounce in a short period. The cycle of monetary instability would continue, reinforcing the fundamental truth that fiat currencies lose value over time, while gold remains a constant. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
If you think of the statutory price of gold on the Federal Reserve's balance sheet is $42.22 an ounce, and the market spot price is $2,900. Actually, I think it's $3,000 right now. I think we just had a massive jump today. So if you think of the dollar as a note for 142 of an ounce of gold, but the Federal Reserve, the gold window is closed temporarily, right? So it's like a restaurant. This is the example I use. It's like a restaurant. Let's say you have a coupon for one free meal at a restaurant, and you drive over to the restaurant, and the restaurant has a sign on it that says temporarily closed for renovations, right? That coupon is not worthless. Now, if the restaurant said, we out of business, out of business, lights off, that's now a worthless coupon, right? Because there's nowhere to redeem it. But because the restaurant says temporarily closed for renovations, you say, well, I'll just hold on to this coupon until the restaurant reopens, and then I'll go back and spend the coupon. So because the gold window is temporarily closed, that note still has some value. And if you listen to Nixon's speech, he specifically said, I have temporarily closed the gold window. He didn't say, we're done with gold, it's out of here. He said, we've temporarily closed it. So because it's closed, you can think of the $42.22 note coupon as an offer for gold on an indefinite time horizon, or even an infinite time horizon. So at the end of time itself, when the last stars have twinkled out and only black holes exist, you should be able to go down to the door of the Eccles building and knock on it and say, I would like to, can I redeem my note now, right? Can I redeem it for $42.22 an ounce now? But if you want it today, if you want gold today, you have to pay, that's like a futures contract. So if you want it today, you have to pay much more money, much more dollars. You have to pay $2,950, right? So you could think of it almost like a rubber band. So here is the $42 is the base, and then the present keeps going farther and farther and farther away from it. And eventually it's going to snap, right? Because this is going to lose all relation to this and the rubber band snaps. Now, what the revaluation, what they're talking about, what the people who do not understand money saying is, if we revalue this to $3,000, it'll just go bloop, and then there will be no more stress on the banking system. There will be no more stress on the monetary system anymore at all, right? We're just going to go boop. It's just a technical. It's just a balance sheet issue. It's a gimmick. Doesn't mean anything, but it'll help. It'll help the Treasury Department, pay some bills. If you were to revalue this to this, what would happen is it would just shift over. So we'd have the statutory price goes from $42 to $3,000, but then you can think of it as I could have an ounce of gold for $42.22 on an infinite time horizon at the end of time, or I can have it right now for $3,000. So if I bring that to the present day, now I can say, well, I can have at the end of time itself, I can have $3,000. I can have gold for $3,000 an ounce, or I can have gold for $3,000 an ounce right now. So what are you going to do? People say, well, I'm not going to live till the end of time, so I'm going to take $3,000 right now. So everyone rushes out to buy gold, and that skyrockets the spot price of gold. So once again, back to the rubber band, it just shifts over. And so now the statutory price is $3,000 and the market price is $15,000, $20,000, $30,000 an ounce. And this will happen, within a couple of days as well. Now, the gold is the price matrix, Mario. It is. We are still on a gold standard. We never left it as far as pricing and other goods and services in gold. In 1971, right before they closed the gold window, a cup of coffee cost 5 cents and an ounce of gold was $35. Now, a cup of coffee costs $3, a small cup of coffee, and gold is $3,000 an ounce. So it's 1/1000th of an ounce of gold. So coffee in gold terms has actually gotten cheaper over time, not more expensive. If gold goes to $3,000 an ounce statutory, it goes to $15,000, $30, $35,000 an ounce, then we're going to see things like coffee being $35 a cup. We're going to see gas being $100, $200 a gallon, right? We're going to start seeing absolutely crazy prices in dollar terms just from the revalue. And this will happen within days to weeks of the revalue.
PhilLow warns that financial collapse is inevitable. The U.S. has issued claims on 90 million tons of gold while holding only 8,300 tons, leaving two possible outcomes: a deflationary crash where banks fail, or hyperinflation that renders the currency worthless. Either way, the dollar will reset, forcing individuals to rebuild their savings from scratch. Treasury Secretary Scott Bessent acknowledged the growing financial risks, stating that the Trump administration is working to prevent a crisis from years of excessive government spending. Since taking office, President Trump has prioritized addressing fiscal instability, forming the Department of Government Efficiency, led by Elon Musk, to implement job cuts and early retirement incentives across federal agencies. Despite these efforts, the U.S. debt problem has only worsened. In Trump's first month, the budget deficit for February surpassed $1 trillion, underscoring the magnitude of the challenge. Bessent admitted that there are no guarantees the U.S. can avoid a recession, highlighting the fragility of the system and the uncertainty surrounding efforts to stabilize it. Let's get back to the interview.
The end game is absolutely inevitable. There's nothing that Donald Trump or anyone else can do, because we have essentially printed notes for money we don't have. And if you math it out, we have theoretically, there's 8,300 tons in Fort Knox. We've printed notes for 90 million tons of gold. So there's nothing we can do to cover this. We must default. Either we do a technical default where all the banks go out of business and we revalue to gold on just the cash front after a deflationary crash, which is sort of what happened in 1929. Or we have a hyperinflation where we try and, the government tries to keep this party going and it fails, and the currency goes off into worthlessness, and then we revalue and chop a bunch of zeros off. Those are the only two possible outcomes. They're equally miserable experiences. They're slightly different in how they go through, but the result is the same. It's a revalued currency, and people rebuilding their savings, their real savings from scratch, starting at a much lower position from where they were. Now, Trump's economic advisors are not the best. There's like Peter Navarro and Steve Bannon and other. I've listened to them speak, and they have the wrong mentality about this. Their mentality is that they can save the fiat dollar, that this dollar can in fact be saved, but it cannot. So because they think it can be saved, they're thinking, oh, if we cut spending, if we put up high tariffs, if we bring manufacturing back, that we will somehow keep this, we can keep the fiat dollar going. We don't need to go back to the gold standard. The problem is the way this scam is structured is that the debt must grow exponentially or you fall into a deflationary collapse. It absolutely must. So to get the debt to grow exponentially, the dollars must leave our shores and never come back because we need foreigners to take our dollars and give us stuff. And we in America need to sit down, get into debt, and don't do any productive work. That's just the nature of the scam. It's how it works. So if tariffs go up on our side and the dollars can't leave and get stuff in, then we enter into a deflationary crash, right? The banks can't generate any more debt in America, and therefore, the banks start going out of business and shutting down, and the whole deflationary cycle starts, the whole deflationary crash. Now, if I could advise President Trump, what I would say is that you need to take the Javier Milei approach to this. Stop telling everybody, because right now Trump's messaging is, once we're done, like the only problem you're going to have is you're going to have so much money, you're not going to know where to spend it all. That's literally his message right now. He said this, on his press conference. Oh, I'm going to make everybody here so rich. You need to take the Javier Milei approach where you get on TV and you say, we have no money, no he plata. That was his inaugural address, no he plata. Trump needs to be saying that right now because he's setting up expectations for things that he cannot possibly do. And people like you and myself who are telling people to invest in silver and gold or to buy, you can't really invest in it because it's money. I've said this before. That would be getting off a tangent. But to purchase silver and gold with your fiat currency, we are telling people to do that, but a lot of people that are big supporters of Trump maybe would otherwise listen to you and I if Trump was not saying, don't worry, I'm playing 4D chess here. I've got this all under control, and you're going to be unbelievably rich when I'm done here. So the messaging he is giving out right now is going to impoverish a lot of his most fervent supporters who believe in his mission. And I don't think he's nefarious. I mean, there's always the chance there's something nefarious going on back there, but I don't think it's nefarious. I think he just genuinely believes that he can control the fiat dollar, which he cannot do. And so I would say that we on the sound money front must continue our messaging and not treat the president as an ally on this front yet until he realizes that he cannot control this situation and starts encouraging people to move into gold and silver directly.
As history has shown, financial systems evolve through cycles of expansion and collapse, with gold often serving as a stabilizing force amid monetary turmoil. The ongoing debate over revaluing gold underscores broader concerns about currency devaluation and fiscal sustainability. With mounting debt and economic uncertainty shaping the landscape, whether policymakers can implement meaningful reforms or if a more dramatic financial reset is inevitable remains to be seen. Investors and savers alike must navigate these shifting dynamics, considering how to protect their wealth in an era of potential monetary transformation. Will the push for gold revaluation signal the beginning of a new monetary era, or will it accelerate financial instability, leading to unforeseen consequences? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.